Ladies and gentlemen, good day and welcome to the Matrimony.com Q1 FY23 earnings conference call hosted by HDFC Securities. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference, please signal an operator by pressing star then 0 on your touchtone telephone. Please note that this conference is being recorded. I now hand the conference over to Mr. Amit Chandra from HDFC Institutional Equities. Thank you and over to you, sir.
Thank you, operator. Good evening, everyone. On behalf of HDFC Securities, I would like to welcome you all to the Matrimony.com Q1 FY23 earnings call. We have with us today Mr. Murugavel Janakiraman, Promoter and Managing Director, and Mr. Sushant Pai, Chief Financial Officer. So without further delay, I would like to hand over the call to Mr. Murugavel to provide a brief overview of the quarter gone by, and then we can open the floor for question and answer session. Thank you and over to you, sir.
Thank you, Amit. Good evening, everyone. I hope all of you are continuing to stay safe and healthy. I take this opportunity to wish everyone advance wishes for the Independence Day, a 75th year of Indian Independence Day. I like to iterate our purpose is to build a better Bharat through happy marriages. Okay, last year in FY22, we reported a double-digit billing growth in billings and revenue. Continuing with the trend, I'm happy to report another quarter of double-digit billing and the revenue growth. Also, it is heartening to see that our paid subscriptions grew by 13.8% and have reached 2.5 lakhs in the quarter, and taking it to an annual run rate of million paid subscriptions. This also signifies that we are making good progress with our strategic priority. Now let me come to the results. In Q1, on a consolidated basis, we have achieved rupees 116.5 crores in billing, which is a 10.8% year-on-year growth. Revenues were rupees 116 crores, which is 10% year-on-year growth. Let me share the key highlights for the matchmaking business, which are as follows. In Q1, billing was at rupees 104.6 crore, a growth of 1.2% quarter 114.6 crore, a growth of 1.2% quarter over quarter and 9.4% year on year. It is a high of double-digit growth. Revenue at 114.2 crore, a growth of 4.6% quarter over quarter and 8.9% year on year. We added 2.5 lakh paid subscription during the quarter, a good growth of 7.2% quarter over quarter and 13.8% year on year. Average transaction value for the matchmaking business declined by 5.6% quarter over quarter and 4% year on year, and this is in line with our paid subscription acquisition strategy. We continue to track the impact that we create for our customers, and we are happy to state that we have created about 23,000 success stories in Q1. Now coming to the marriage services business, the revenue was rupees 1.8 crore, a growth of 26% quarter over quarter and 227% year on year. The loss in the quarter was rupees 3.4 crore compared to rupees 3.1 crore in the previous quarter. We have completed integration with Shaadi Saga and we expect the growth momentum in wedding services to further enhance. I'm happy to state we have launched the Be Choosy new TV campaign that explores the bias against women who want to be choosy when it comes to finding the right life partner, and that has been received very well. At the recent Curious Creative Awards, Bharat Matrimony tailored Badal to Shaadi, a social initiative to empower girls to choose education over marriage. It bagged 14 awards. The awards are a celebration of the most outstanding and innovative work in advertising and the marketing communications. On the billing and revenue outlook for Q2, Q2 is a seasonally weak quarter. Due to this, on a consolidated basis, we expect that we may fall slightly short of double-digit year-on-year growth. On wedding service, the momentum is expected to continue, and lastly, we get a similar level of Q1. Let me pass on to Sushant to comment on the key property highlights. Sushant, over to you.
Thanks, Muruga. Our EBITDA margin for the matchmaking business in Q1 is at 23.5% as compared to 22.7% in quarter 4 and 27.7% a year ago. Marketing expenses are at 43.5 crores as compared to 42.7 crores in quarter 4 and rupees 37.3 crores year ago. Excluding marketing expenses, our margins in matchmaking are stable at 62%. In this quarter, we had salary increments for people. Average salary increment was in the range of 9 to 10%. On a consolidated basis, our EBITDA margins in quarter 1 are at 17.6% as compared to 18.1% in quarter 4 and 21.6% a year ago. The tax rate in the quarter is at 21% as compared to 26% in quarter 4. The tax rate is reduced due to lower tax on realized gains on mutual funds, which were redeemed to fund the initial buyback amount of rupees 18.75 crores. PAT, excluding Astro, is at rupees 12.1 crores, an increase of 2.1% quarter-on-quarter and decline of 14% year-on-year. Share of loss from Astro is rupees 16.3 lakhs. Net profit margin has been stable at 10% plus levels for the last 3 quarters. Our free cash generation has been robust at about rupees 22 crores for the quarter, signifying free cash flow conversion from EBITDA at 1.06. Return on capital employed for the quarter is at 15.7%. On the outlook for Q2 margins, based on what Muruga said about the revenue and billing achievement, we expect EBITDA and PAT to be slightly lower than Q1 levels as it is a seasonal quarter. I would like to end with a customary safe harbor statement. Certain statements during this call could be forward-looking statements on our business. These involve a number of risks and uncertainties that could cause actual results to differ materially from such forward-looking statements. We do not undertake to update any such forward-looking statements that may be made from time to time by or on behalf of the company unless it's required by law. Over to you, Amit.
So would you like to begin with the question and answer session?
Yes, we can.
Sure. Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone who wishes to ask a question may enter star and 1 on their touchtone telephone. If your questions have been answered and you wish to withdraw yourself from the queue, you may enter star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, you may enter star and 1. We have the first question from the line of Deep Shah from B&K Securities. Please go ahead.
Thanks, sir. So my first question is around the ATV. So it's actually very heartening to see paid subscription going up. Now, this ATV, would you say is a function of increasing competitive intensity? We saw some concessional offerings being introduced, or is it just a function of this quarter being generally a soft quarter and therefore we have given reduced prices? So that would be my first question. So second question was, if you could give us some more update on your new initiatives, how have they panned out and what is the traction there? Yeah, thank you.
Thank you, Deep Shah. ATV is a function of various things. It's a combination of pricing strategies which you deploy for various segments. So ongoing basis, continue to figure out various segments, continue to offer different pricing strategies to increase the monetization. So that's one of the reasons. Another also, we launched new initiatives. It's a combination of all these factors that has contributed to the reduction in ATV. However, that has contributed to the increase in the volume growth. So we do expect the ATV to be at a similar level. Again, as I said, we continue to figure out or continue to employ various strategies, pricing strategies to drive the growth. So in terms of the new initiatives, we are still in the early stages. Nothing significant to comment at this point of time. So both the new initiative what we launched through the vernacular matchmaking app and also the global matchmaking initiative.
Okay, thanks, sir. So just as a follow-up, so including, so we see that our investments is gradually increasing in Shadi Saja. So if I compare even the marketing spends, it's gradually improving. So have we now fully integrated Shadi Saja, and what is the traction there? Have you introduced differential plans there? Any update on that would be very helpful.
Yeah. Thanks, Deep. Yeah, we have fully integrated the Shadi Saga platform into weddingbazaar.com. And not only the platform, listings, everything are being integrated. Today, that makes us the largest player in the wedding services space. The Wedding Bazaar has over 100,000 listings. Even Mandap.com has around 40,000 plus listings. So we are the largest player in terms of wedding services, in terms of listing. And we could be able to leverage some of the good things of Shadi Saga in terms of the value delivery platform and the large social media followers, and everything was being successfully integrated to Wedding Bazaar. In terms of pricing, we have the pricing strategy, and again, it's a subscription business model. And our objective is to get more number of listings and try to get more people to go for a paid subscription. We see the traction is happening. Again, this business is still in the early stages, but good to see that this business is growing and at a faster pace. We expect the growth moment to continue. In terms of pricing, again, there are multiple segments. We have multiple categories: photographer, makeup artist, various categories. Various categories we have various pricing because the pricing is not same for across the categories. Vary from category to category, and there are multiple packages as well. There's no one standard package. So to respond to one single price, it's a different prices and the different pricing strategy because the category has the business has multiple categories. The nature of the business has multiple categories. We have multiple prices. What is charged for photographer is not the case of makeup artists. Again, it varies from city packages, various pricing for various categories and also based on cities and other things.
Right, sir. This is very helpful. Thanks a lot.
Thank you. Thank you.
Thank you. Participants, if you have a question, you may enter star and 1. We have the next question from the line of Prakash Kapadia from Anived Portfolio. Please go ahead.
Yeah. Thanks for the opportunity. A couple of questions from my end. One of our competitors, the number 3 player, had, mentioned about a change in, business model in terms of giving free listings and maybe, reducing ad spends on a going forward basis. So in that, context, we see, ad spends being lower for us for the coming quarters because, currently they don't seem to be trending down per se. Any thoughts on how will ad spend shape up for us and the industry?
Thank you, Prakash Kapadia. But at this point of time, we continue to see increase competitor spend. As we speak also, we see that the marketing spend at a higher side at elevated levels. If you see that on a steady basis with the marketing spend come down, then at the industry level, then we definitely look at lowering marketing costs because as we communicated in the past, obviously we are spending much more than what is required because of the increased competitive activities and the marketing at the elevated level. If the industry sort of realize that the increased marketing spend not helping in a way that order to see that there is some kind of reduction of marketing spend, yeah, we'll definitely take a look into it and take necessary steps at that point of time. But as we speak, the marketing is still at elevated levels for the industry.
Okay. And, despite a 3-player market, the growth trajectory in, the online matchmaking doesn't seem to be, inching at a higher pace. So is it, some of the pricing issues? Is it conversion? Because, given the base and the industry size, growth doesn't seem to be, being faster on a lower base also. So what is really affecting the growth? because, you're just three players and the market itself is so small. So just wondering what is still affecting the growth, because now everything seems to be opening up, things are normal. So I would have expected, maybe the industry as well as us would have grown at a faster pace. So any thoughts on that?
No, there's a combination of multiple things. One is that the increased marketing spend and discounting and all these factors in a way also contribute to to some extent the growth also. So because one is acquiring a free member and converting a free to paid, and so yeah, probably that would have contributed to the growth to some extent. However, while we continue to, working on our strategies, we had a less than double-digit growth. Now we move to double-digit growth. We continue to work on our strategy to take the growth to the better than just a 10% growth to and higher levels. And we continue working on our strategy, executing our strategy. Hopefully, as we progress, we could be able to move to a better growth rate. So again, as I said, it's a combination of pricing. Also, in a way, played that the growth and all that. So discounting, higher marketing, pricing,
and typically, is Q3 the best quarter for us from a seasonality perspective?
Typically, we see that Q4 is the quarter where normally the growth is better over the previous quarter. Because the Q4 is normally, and Q2 is seasonally is a weak quarter. Q3 is bounces back, and Q4 is to the next level of orbit and all that. So you always see Q4 move to the next level, then that sort of more or less operate similar level, then move to the Q4 is the best numbers normally.
Right. Understood.
So yeah, at this point of time, yeah, we sort of the double-digit growth and more or less, and we expect even complete the year with the double-digit growth. But as I said, we are kind of working on our strategies and to get the growth to better level.
Understood. And lastly, what was the final buyback subscription number, if you have it handy, Sushant?
Yeah, the final subscription number was about 763%, somewhere in that range.
Okay.
Yeah.
Oh, fine.
So
I'll join.
6.52 back. Yeah, 763, something like that.
Yeah, right. Understood. Thanks. I'll join back if I have more questions. Thank you.
Thank you.
Thank you. We have the next question from the line of Amit Chandra. Please go ahead.
Yes, sir. Thanks for the opportunity. So my first question is on the market share. So as we all are aware that there is an increase in the competitive intensity, and the competitor is providing packages for free. So are we seeing any loss of market share in the South market, which is our dominant market? And also, if you can throw some light on what are our plans to increase our share in the North market. So on the market share, how we are seeing it mostly on the geographical basis. And also on the ATV decline that we are seeing for the last 2 quarters, is it because of pricing discount which is similar to what the competition is giving in the North market, or is it because of change in mix, as you mentioned, because the packages prices, the base prices have not come down, but is there a significant change in the mix that is happening that is bringing the ATV down?
Yeah. Thanks, Amit. In terms of adding our market share, I think continue to remain strong. It's a strong market. The country remains strong and continue to grow. In terms of the strategy to grow North, and again, it's more of again product improvements and kind of marketing, stepping up marketing, and we continue to spend less compared to other players in North. We continue to increase marketing, and the third is that again the various product and pricing strategies as well. So ATV is a combination of the various packages and discount offered to multiple segments. and also is also launched new products. The combination of all these factors have contributed less in ATV. We expect ATV sort of may remain at this level or may go down also. And again, we are looking at how to get more people to go for paid subscriptions and grow the double digits. So.
So on the ATV, the decline is because of the mix change. So maybe people with like lower duration, lower value contracts are higher in the mix versus historically, or how we are, is there a change in trend that we are seeing?
Yeah, no, it's not that we're not any significant change in the mix and all that, because most of it will go for 3-month package. That continues to remain the level. And as I told you, within 3 months, so there are multiple segments, multiple regions, and so we have a pricing strategy. There's also a new initiative. We combine all these factors lower the ATV now. Yeah, but no significant change in the mix and all. That's it.
Okay. And sir, in terms of our advertising expenses, as you mentioned that obviously it's going to continue. So what will actually make us think on our advertising expenses? So maybe we are seeing good growth in profiles. So what are the 3 to 4 main parameters that you track in terms of benefits that we are achieving from the marketing spend? So obviously one is the profile growth, but apart from that, are you seeing some increase in the addressable market, or maybe more investments into technology which can drive more penetration, maybe conversion from free to paid profiles? So if you can throw some light also in terms of technology, what you're doing.
Yeah. So one is the marketing, again, it's a combination of our strategy to grow the profiles, and also in a way that there is an increased competitive activities, and we also need to step our marketing to defend our market share or grow our market share. So it's a combination of our strategy and also how it's getting played in the market. So that drives our marketing spend. And in terms of the technology thing, we migrated to the cloud platform early this year. That's one thing that happened. And we also kind of making on the technology front, we are just kind of working to integrate all our applications within the platform that will help us to execute faster. So these are some of the technology things also happening. As we progress, we give a better capability to execute our product priorities and other things in a better manner or in a faster manner. So there are some technology things been happening, and so we expect once all this is done, we'll probably our execution may get better.
Okay. And sir, obviously the offline, everything is open now, and so in terms of online versus offline, in terms of our offline retail stores, are we seeing some traction there, or how we are seeing the online versus offline mix? So, and like what are our expansion plans on the offline side? If you can.
No, it's predominantly online. Where retail is set up to complement in core markets, and so it's not having any significant traction in retail, but again, it complements well for us, and it's a small percent of business. And so at this point of time, we are not taking any significant addition to our retail and also.
Okay. Okay, thank you, sir, and all the best for the future.
Thank you, Anand.
Thank you. Ladies and gentlemen, to ask a question, you may enter star and 1. Participants, if you have a question, you may enter star and 1.
Melissa, if there are no questions, yeah, somebody.
Sure. Actually, there is one person who's just entered the queue.
Sure, go ahead.
Sure. We have the next question from the line of Sonal from Precision. Please go ahead.
Hi, sir. Am I audible?
Yes, Sonal, please go ahead. Yeah.
Hi, sir. I've been on the call, so not that I've joined, but I just wanted to understand from a little longer term perspective, sir, the way the incremental marketing burn and the way the incremental top line moves in sync. Is there, like, I understand the competition is intense and maybe at times not we're not caring about the P&L, but when you do and when you make your plans, is there like a RO, like a top line incremental number line when you say, like, if I want to put 1 rupee extra on marketing, I expect so much of sales, or else in the next quarter I will not try what I wanted to try this or what I have tried this quarter. So typically in marketing, like people say, if I put a rupee in marketing, expect, let's say, 4 to 5 times of that in incremental sales. So just trying to understand that from you. Like, what is the internal matrix for that?
Thank you, Sonal. The marketing is a tricky question. There is a performance marketing, there's a brand marketing. Performance marketing, obviously, there are multiple performance marketing, Google and various other marketing things, social media marketing. With online marketing, obviously, you should be able to measure the ROI. When it comes to brand marketing, I want to quote one of the famous marketers, I forgot the name. He said, I know the marketing works, I know 50% marketing works, I don't know which 50%. So, so when it comes to the brand marketing, we definitely look at, how it's contributing to our profile and other things. However, today, marketing is, in a way, it's a combination of multiple things. Our strategy, what's going on in the market, and also there's the consumer intent category. Again, we don't have, there's something like a permanent customer. So some bit of marketing necessary. But today, the regulated marketing is necessary. No, it's not the case. The regulated marketing is because sometimes we have to defend our market share because, and sometimes when the competitors are spending more than what's required, so it's, where you can, do it 1 rupee. The company is spending 3 rupees, so we are forced to increase the marketing spend. What is required, sometimes you have to have that necessary share of visibility also. We can't go down on visibility to beyond the next. And it's a combination of multiple things. So that way, when it comes to brand marketing, they know, it is, again, as I said, the current dollar marketing record, no, not the case. It's on, if you look at the marketing spend prior to our IPO, or maybe at we are doing 50 crore marketing. Now we are doing 150 crore because the marketing spend at Canada was 100 crore for the category. Now the marketing spend has gone up 400 crore in 4 years. When the marketing has gone up from 100 crore 400 crore, obviously we need to increase the marketing spend to different and also grow because we are a leading player. And I will say that we continue to defend well, continue to grow, and we continue to widen the gap between us and the other players. So yeah, we are here for long term. We continue to do what is right thing, and so maybe as we progress, maybe at point if things really become to normal, then we may get the benefits at that point of time. But at this point of time, I don't know how long we will continue. But I will say that we are leading player, large player in this space. We continue to invest, continue to do what is right for us.
Sure, sir. I think that explains it. So just trying to, and this is more a theoretical question, just to trying to understand the adoption of the category by customers in the end. So let's say hypothetically, if you were, I think you roughly spent 45 crores this quarter. If this number was, let's say, 50 crores or maybe 10% higher is the point I'm trying to make, would your top line would have gone in a commensurate manner? Or is it at a better point where there is no elasticity in demand and it will be rather a wasted marketing burn than actually adding to the top line? So just trying to understand where are we in terms of just setting the marketing up and down a little bit to understand the demand in the market.
Yeah, if you look at, there's a digital marketing, as I told you, and there's a necessary marketing, there are brand marketing. The necessary marketing largely on display side. And again, we get a large number of profiles that people are searching for a brand and create a profile. So obviously today, we need to again defend our brand there. So that's when people are looking for brands today, they are become synonymous with the category. When people looking for Bharat Matrimony or Tamil Matrimony, Marathi Matrimony, you have to ensure that we advertise for those brands. So it's a trademark and but instead of that, we have to bid and protect our brand. There's a large number of registrations on digital side, mainly led by a brand thing. When it comes to brand market, so digital is, yes, you look at many things. When you invest in digital, look at ROI and ensure that you do the right digital investment in marketing. So go back to the question, if you increase the marketing, will it contribute to the growth? Yeah, if you take instead of 45 crores from 60 crores, yeah, that is some additional thing comes. But what is the incremental cost or the incremental benefit? Even today, our marketing spend is at much more than what is required for the current level of the revenue and all those. So putting more money, yeah, it may contribute a little bit of, but again, the incremental versus benefit. Yeah, today we spend what is required. There are some markets are spending less also because obviously we want to operate at a certain threshold and all that. But those things can add incremental things. So yeah, today if you reduce the marketing spend, nothing will happen in the short term on the brand marketing. But our can in the long term can it have an impact on all of this? Possibly in all this, if you don't do any brand marketing. But some amount, as I said, some amount of brand marketing required and all this. But today the brand marketing at elevated level. That's the point. So put more money.
That is basically taper off. That is like a fixed number. So with top line growth, that should come down. That's like a fixed cost. Basically, we should taper off over time as you grow.
Exactly.
And so, like, I may just sneak another question. How are you doing in non-Indian markets, Bangladesh? Just trying to take an update from you on that one. Yes.
Yeah. No, Bangladesh, it's a long term for us. We are number one player there, and over it's kind of many years bigger than India. So we are leading player, number one player, and again it's a small market for us at this point of time. We started investing in the market and small team, started advertising, and we are seeing the traction. Again, our very early stage. So, but yeah, it's going in the right direction. But again, Bangladesh per capita income level of even better, become better than India. It's 1/6 of India population. We look at long term and may play out in long term. So some of the initiatives are long term initiatives for us. So.
Got it. Okay. Thank you, Doctor. That's what I said. Thank you.
Thank you. Participants, if you have a question, you may enter star and 1. We have the next question from the line of Swapna Kamath from NSFO. Please go ahead.
Yeah, hi. So I have a question on marketing expense only. So, now our run rate of marketing expense has gone up significantly. So I just wanted to understand that at what, where will be the tipping point where the marketing expense will start looking like it will stagnate as a percentage of the sales, and where it will be become like an operating leverage for us, that we don't have to spend more on marketing expense. So you think it is too early now, and this will continue because of the competitive intensity?
Yeah, thanks, Swapna. And at this point of time, it's difficult to say because we see that increased marketing spend, the competition is there. And whether it's difficult to say whether it could operate at this level. So it depends on how it's combination. I told you what happening in the market, our strategy. So yeah, it may go up also, and it may come down. Depends on how the environment gets played out. So, but I can't say at this point I'm not in a position to say that we have reached the threshold and we'll be operating this threshold. So probably I don't know, maybe achieve progress. Then you have the clarity that when you are in a position to say that will communicate, but at this point of time, not in a position to clearly say that the marketing has reached a level or not. But however, the thing is that today the marketing, and most of marketing brand marketing spends. So that's a good thing, and so that when there is a leverage, when that point of time.
आपण ज्या व्यक्तीशी बोलत आहात त्यांनी आपला कॉल होल्डवर ठेवला आहे.
I'm sorry about that. Please go ahead.
Oh, no problem. Yeah. So at that point of time, when there is a marketing spend, that can flow into bottom line for us. So that's the thing. So basically, that's a good thing that the brand on the thing is going on the brand marketing.
So you're saying it's not on discounting; it's more on branding.
Yeah, the marketing is very. When you say marketing spend, it's advertising, not a foreign marketing, not a discounting. By the way, prices are all completely excluding all the discount and all that, because in talking ATV. We don't put a discount in the marketing, by the way. All the marketing spends are TV advertisement and digital advertisement. So nothing on the discounting is coming as a part of marketing.
Okay, understood. And so, if we have to look at the company like a little longer from 2, 3, or 5 years perspective, then, what is your internal target as to what kind of penetration levels or numbers, if you could just give us an idea about how this ATV will look like or how a subscription will look like in terms of the overall company? I mean, what are we targeting as a CAGR or when?
Yeah, got it. See, our thing is about next 3-4 years, we want to become a 1,000 crore company. I think that's the next milestone, and the immediate milestone is that we are kind of getting closer to a 500 crore run rate. So once we reach the 500 crore run rate, when we start working towards the 1,000 crore milestone, it will happen in 4 years or kind of, and 3 years or kind of that's something we are working towards it. And in terms of paid transaction, for the first time we reached 1 million plus the paid transaction volume for the year. I think that's a good milestone. But probably next milestone, if we reach 1.5 million paid transaction, I think we may get to the certain maybe closer to that our 1,000 crore benchmark. And ATV, it's sort of it's difficult to say. It may this level or go down or go down. Again, it depends on kind of. I don't get kind of forward-looking decisions at the point because many things contribute to ATV. It depends on how something going to play out, our initiatives and our pricing strategy. But on the revenue side, yeah, we have that milestone for the organization for us that first hitting the 500 crore run rate and working towards the 1,000 crore benchmark.
And with similar profitability or a better profitability?
So obviously, when that level, look at even today we're operating at a 62% gross margin on the matchmaking business. So at this level, obviously we have a strong leverage because the consumer business like us, we have a very limited capital expenses and the EBITDA margin continue to get better. So when that's kind of, we definitely have a few hundred crores of EBITDA and all those, that also possible.
At 1,000 crores.
Yeah.
Okay. Yeah. Okay. Thanks.
Thank you. Participants, if you have a question, you may enter star and 1. To ask a question, you may enter star and 1. As there are no further questions, I would like to hand the conference back to the management for closing comments. Please go ahead.
Thanks, Melissa. Thanks, Amit and HDFC for hosting us. If you have any further questions, please do write to us and we'll be happy to answer them. Have a good weekend and have a good 71st Independence Day. Thank you all for joining.
Thank you so much and thanks for your interest in Matrimony.
Thank you, members of the management. Ladies and gentlemen, on behalf of HDFC Securities, that concludes this conference. Thank you for joining us and you may now disconnect your lines. Thank you.